Well, if I go back and look for locks, the original sale occurred right here, June the 5th. That's when I sold the merchandise to Locks Company. So what were the credit terms that I offered them? 210N30. Meaning I will give you a 2% discount if you pay me within 10 days. If not, you have to pay net or full price, and that has to be paid within 30 days. So that means that as long as they pay us on or before the 5th of June, or the 15th of June, the June 5th plus 10 days, 15th, as long as they pay me by that day, they are entitled to a 2% discount. Well, look at this. Lo and behold, it's June 15th, the final day, and this is the day that they're paying me. So they are entitled to a discount. So I'm not going to receive $3,500. I'm only going to receive part of that. So think about it like this. If they're entitled to a 2% discount, what am I going to get out of this? I'm going to get 98% of the money. So 3,500 times 0.98. I'm not going to get 3,500. I'm only going to get 3,430. And notice this, my journal entry is out of balance. That's why I left that extra space there. I need $70 to make it balance. So what is that $70? That is sales discounts. So basically, I lost $70 by offering that discount, but maybe it's worth it, because maybe offering that 10-day discount encouraged them to pay, and to pay quickly. Remember, we talked about that in our video lecture. That's the whole point behind those discounts. So see how that's a little challenging. So most of the time when you're dealing with merchandise, it's pretty easy. You're buying things, selling things, returning things. But when you get down there and start making payments and receiving payments, that's where it gets a little bit more complicated. So that takes care of that one on the 15th. Now, on the 18th, we are going to pay the amount due to Welsh Company. So this is a little different. It's not a receipt, it's a payment. Now, what do I owe Welsh Company, and when is this occurring? This is on the 18th of June. And I'm paying Welsh Company. So I'm settling the account payable Welsh. So I want to debit accounts payable Welsh. And then I'm going to skip a space because of possible discount and go down here and credit cash, because I'm going to pay for this with cash. Now again, what exactly do I owe Welsh right now on the account payable? I'm going to go back and look at my labels. Where was it used? Well, the first time it was used right here on the 8th. Accounts payable Welsh, 5,500. Then do I see it again? I see it again right here on the 12th. A debit of 500. That was that reduction. So it's not going to be 5,500. It's going to be 5,000. So you see how you have to watch out for that. That's where the labeling comes in handy. Then the other question is, when I pay this 5,000, am I necessarily going to pay the full 5,000? Maybe not. I might get a discount. So again, to see that, I've got to back up and look at what happened. So this purchase from Welsh occurred back on the 8th. What were the credit terms that they offer? They offer 110N45. So if this occurred on the 8th, 10 days, I have to pay this by the 18th to get the discount. Well, lo and behold, it is the 18th. So I am entitled to a discount. But notice this, and watch out for this. They only offer a 1% discount. So I'm going to have to calculate that a little bit differently. So instead of having to pay $5,000, I'm going to pay 99% of 5,000, which is $4,950. So there's a difference there. It's a difference of how much? $50, but it's a difference on the credit side. And what is that going to go to? That's going to go to merchandise inventory as a credit. Now what's interesting about this is if you look at these last two entries side by side, the one on the 15th and the one on the 18th, there's some potential here for confusion. Both of these involve discounts, but see how they were treated differently? See, the discount here was a debit, and I put it to sales discounts. But down here, the discount was a credit, and I put it to merchandise inventory. I know that's confusing, but here's the explanation. This is a discount for my customer. That was on a sale. I gave my customer a discount. So that was an expense. That went to sales discounts. Down here, I'm the one who got the discount on my purchase, so it goes to merchandise inventory. So that's different. I know that's a little confusing, but you have to always remember that in order to account for things properly. And of course, another clue is, obviously, mathematically, this had to be on the debit side, and this had to be on the credit side in terms of balance to make the journal entries balance. So that takes care of the 18th. Then on the 19th, another sale. This time to Tux Company, $3,300. The merchandise costs $2,000, and it is a credit sale. So this is on the 19th. It's a sale, so always 2 entries on every sale. The retail price in this case is $3,300, and the cost was given as $2,000. So every time you have a sale, it's always 2 entries like that. Now this is going to be pretty easy because we've had sales before. We know exactly what to do. It's a credit sale, so that means they owe us the money. So that's accounts receivable. And I'm going to put the name of the company, Tux, for labeling purposes. And that's sales on the credit side. And then we always do this on this part of it. We debit cost of goods sold and credit merchandise inventory for the cost. So that records that sale. That's pretty easy to record. Next transaction on the 22nd. Tux is requesting a price reduction. We don't know the story behind it, but for whatever reason, they were not satisfied with the merchandise. So we'll just issue a credit memo to take care of that. Keep the customer happy. The customer's always right, as they say. So we're just going to give them a $500 credit to resolve this. So this is on the 22nd. This is a credit memo for $500. So $500 is the amount. Now what we're doing here is by giving them this credit, it's going to reduce the amount that they owe us. So I'm going to turn around and credit accounts receivable for Tux. See, I had just debited it, and now I'm turning around and reducing it with a credit. And this price reduction, that just goes to what? Sales, returns, and allowances. That's the debit. So that shows you that sales, returns, and allowances is used for both returns and for allowances or price reductions. And one of the things that's interesting is an account like that, that is an expense account, even though it doesn't have the word expense in the title. So that's why I'm debiting that particular account. Next transaction, 29th, we're going to receive the balance due from Tux. So it's the 29th, we're going to receive the money due. I'm going to debit cash. I'm going to skip a space and credit accounts receivable Tux. That's going to be a credit. Now at this point, what do they owe me? Well, originally, we don't have to look too far to find this. This just occurred. We originally sold this. They owed me $3,300. We gave them a reduction of $500. So really right now, they only owe us $2,800. And then there's a question of, are we going to give them a discount? Well, when did the sale occur? Occurred on the 19th. Credit terms, 2/10/30, 10 days, 19th to the 29th. It is the 29th. So they are going to get that discount. It's a 2% discount. So I'm not going to get $2,800. I'm going to get 98% of that amount, which is $2,744. There's a difference there. There's a discrepancy there of $56. It's on the debit side, and because it's a discount that I'm giving to my customer, it goes to the expense account, sales discounts. So that takes care of that transaction. And then the final transaction is on the 30th. Says we're going to pay the amount due to Adams Company. So this is on the 30th. We're going to pay the amount that we owe Adams. So it's an accounts payable Adams. What do we owe Adams at this point? Well, we need to go back and find out. Originally, this occurred back on the very first day of the month. We owed them $5,500. But remember, we paid that $75 of shipping, which reduced the amount that we owed. So we don't actually owe $5,500. What we really owe on the payable, at least, is $5,425. Now, I'm going to pay for that, but the question is, am I going to get a discount? Probably not, because I didn't pay for this until the end of the month. I bought this the first day of the month. So go all the way back to the first day. June 1st, that's when I first bought this. Credit terms were 210N30. Well, if I was going to get a discount on that, I would have had to have paid that by the 11th. Well, it's not. I didn't do that. So now it's June 30th. So I for sure have missed the discount window. So in this case, I actually don't have to calculate anything. I'm going to have to pay net. I'm going to have to pay full price, $5,425. And that's a good example because that shows you that you can't necessarily take for granted that they're going to get a discount. They may not. So always check your dates. Don't just automatically take that discount, because sometimes when you really look at the dates involved, sometimes they missed it and they're actually not entitled. And that's the case of both sales and purchases. So that completes the solution for this example, which is on merchandising entries.